November 25. Michael Vaughn with Brian Acker. Brian, I've been traveling. I haven't seen you for a while, but let's get caught up. It really feels awful, but you know, we're not that far underwater.
Actually, since the last video we did,
Was a while ago.
Was a month and a half ago, October something or other. We've been positive 3 times in the U.S. equity.
That's amazing.
And anyway, we're on the downward thrust here, but I've been making this prediction. I still think we're going to be up for the year. But looking at the year to date, in Canada we're down 15.3%. And our bogey is the S&P TSX 60. That's down 15.2.
Yep.
So we're right in line. Actually, the small cap in Toronto is down 20, so which is quite a bit worse. The U.S. fund, we're down as of yesterday 8.23, and the S&P is down 7.6.
It feels like 107. You know, it really does.
The press is so negative, and probably rightfully so about Europe, but I can tell you every day it's like you know your head's in a vice. So I can tell you.
Third quarter earnings were terrific, but governments are broke.
Governments are broke. Third quarter earnings were just so great. It looks like we're going to do $102 on the S&P, and even with the S&P index at about 1180, let's say. Yeah, that's about 11 times. So anyway, but everyone's fearful of the future. If Europe goes down, no one knows what the impact is. So Europe is playing out day by day. It's important to, you know, for us to, as solvency experts, and that's what we do all day, is look at balance sheets. You know, Europe is insolvent. Many of the countries are insolvent, and that's why, you know, the central banks play such a key role, including that of the U.S.
Yeah.
And every day you get these pronouncements from the central banks, whether what they will do, what they won't do. And it's a little reminiscent of 2008, only in the extent that the U.S., you know, they finally did the right thing, but, you know, it just took them a while to get there. And it's the same thing in Europe. That's how it's playing out.
If you look at long bonds, U.S. long bonds as an asset class, you'd say, whoa, I want to be there. Look at the returns this year.
Oh.
Sorry.
That's true. I mean, what I'm doing mentally is I'm looking at, for instance, Italy. Italy's yields have actually doubled in less than 30 days. So they had an auction last night. The 5-year bond auction yields went to 7.8%.
Wow.
Let's look at T-bills. T-bills have jumped from 3.5% to 6.5% in little 4 weeks.
Yep.
The markets are now, the bond market especially, but let's differentiate the two. Equities, we put on this computerized platform that we can click a mouse, we can use an iPhone to do transactions. The bond market doesn't work that way. The bond market, you need to pick up a phone and you need to trade with a person on the other end, typically a bank. And it's a different market, and I think it's there that the stresses are basically going to be felt, not the equity world. So again, investors are looking at volatility of the equity world. Go ahead and look at that.
Yeah.
But the big show
is
going to be in the bond market.
Well, and you've gone short, short, short.
We've been short for a while. You know, people may be tired of that, but when it does happen,
You think there's a bond bear market?
we haven't had a bond bear market in 17 years.
Yeah.
Okay? Half this gray hair comes from the last one. And what people don't realize is that bond market can go down every day.
Yeah.
And that is very, very scary. The bond vigilantes, they're ripping through Europe.
Mm-hmm.
Germany's not even immune. Germany 10-year yields have gone up 0.5%.
Wow.
So
the U.S. next.
the mother of all trades, baby. It's
Yeah.
the U.S. market. And once the bond vigilantes or whatever, they're finished with Europe, the U.S. is next.
I
So
believe you're, well, but what's that do to equities? I mean, that's where the rotation's got to go.
I think equities will be hit somewhat.
I see.
But a large part of equities have basically can see through what's going to happen.
Yep.
That's my belief. Now, I think we're going to get, go conservative with our portfolio, but the equity market, because A, no one's in it.
Right.
Everyone's in the bonds,
Yep.
et cetera. So I don't think it will be as bad as what people think, but I think people will be shocked at the amount of losses that will occur in fixed income, especially sovereign fixed income.
Keep me out of them. You have so far. Brian, I'm going to Tokyo tomorrow. I'll be back in about 10 days. I'm coming in to see you then.
Happy travels, Mike.